Welcome to the Silent Trading channel. Today we'll be updating on the gold chart on Thursday the 5th of February to see whether the chart right now is in a bullish or a bearish trend, right? To be able to confirm our bias or confirm our price action before we start entering a trade. As you can see right now, the price action is in a bearish side right now because why? Why do I say the price action right now is in a bearish side? Why is it now a bearish price action? Because the 4-hour candle has already created a reversal, right? Created a reversal over here, which is a successful one, right? A successful reversal. And the reversal went to complete, right? Was completed in the second red candle because the second red candle down was able to close below 5,000 psychological support, right? Psychological support is a key support, right? Which means by the price closing below the 5,000 support, showing us that the chart or the market is accumulating buy volumes, and by the market accumulating buy, and if the market is accumulating buy volume, it shows that the market has a chance of what? Of a dump below or an expansion below, right? And then at the next candle, the market break out, right? Break out below. You see here, the market break up below, and then does a candle pullback, right? Leaving a bottom wick down before trying to create a reversal over here. But this reversal was never complete, right? Because why? Completed reversal needs to be able to break resistance. Bullish reversal needs to be able to break resistance before this reversal is a legit one. Before this reversal is a strong one, a legit one, or you can say it's a complete one, right? If the reversal isn't complete, we cannot still say that this is a bullish price action, because bullish price action needs to have the reversal managing to push up and then breaks resistance, right? A bearish price action must be complete by the next candle or the next candle pushing down and then being able to close below support or key support. So this bearish price action is a successful and a complete one and a legit price action, because why? Price managed to push down, touch key support, and then went down to close below key support, which means price action right now is on the sell side, right? And this is what we are observing on the chart, that like I've always said, that we enter a trade and we analyze based on price action totally, and we analyze the chart first based on price action, right? And then we look at each narrative, each action the chart is showing us, each movement based on human psychology. Why is it human psychology? Because every support or resistance, or every zone, every fair value gap, every breaker block, every order block, right? Every single aspect of the chart has someone always entering a trade, right? So when there are support, where people enter a buy position, and there are too much people buying at the support and at each support, or at an instant at one key support, right? And if too much people is buying at one key support, the big money or the smart money wouldn't want all these people to be able to be profiting from the market, right? So they will have to dump on the price, so they will have to dump the chart, right? Because when there are too many people buying means if all these people are going to profit, who is going to lose money? The big money, right? The smart money is going to lose money, the institution is going to lose money, right? So if 90% of the people are profiting, how is the 1% or how is the 10% of the people, right? The 1 and the 10%, how are they going to pay the 90 people profiting from the chart? There's no way. So which means whenever chart are pushing down to touch key support level, or just support or just support level, and there are people buying, If there are too few people buying, chart may still have a chance of going up. But if there are too much people buying, because retail traders ought to believe in what the masses are believing. So if most of the people are looking to buy and everyone start buying, the market will dump on them, and the market will dump and dump and dump until those people stop buying, right? The moment they start buying, the market is gonna dump on them until they stop buying. And if they stop buying, the next thing they're gonna do is they're gonna look to short the market, or they're gonna look to sell, enter a sell position, and that is when the market is gonna start doing a bullish reversal. The market is gonna produce another bullish reversal to the upside and then start pushing upward, because by pushing upward, they are accumulating sell volumes, because they have pushed people or forced people into believe that the market is going down and down and down. And once people are starting to sell, the market then starts to push up. This is the real reason, this is a real reasoning, or you can say this is behind the scenes of why most of the people are losing money, not profiting. Because if the masses are profiting, the big money is gonna pay big money. The big money is gonna incur so much losses, they would have to close down their firm, they would have to close down their fund, right? So you do know right now that most of the time the market is not gonna allow the masses to profit, because if the masses are profiting, no one is gaining anything. Because if the masses are profiting, the firm wouldn't have to pay, the firm will have to dump on the price and then make the masses lose money. And that is because they have the capital, they have the capabilities to do this. Because why? A part of the world's money, a part of the world's capital is in those firms, is in those funds, is in those banks, right? So those banks are holding the money enough to drown us all, which means they also have enough money to make us go into drawdown instead of profiting. That is how the world, that is how the money game is moving, that is how everything is playing out. So if you understand the game, we are not going to be losing, because we are not going to follow the mass. We are going to do what the mass is doing after the mass is out of the game. So if the mass is buying, we wait until the price dump all the way down until the mass is closing off their position or the mass is liquidated. That is when we're going to start buying, because once the mass is out of the game, we're going to start buying, right? Once the mass is out of the game, that is when we're going to start selling, which means we will never be the first one to buy, we will never be the first one to sell, because that will be too risky, that will be too unadvantageous to us. So there is no way to trade. The right way to trade is to wait for the mass to incur losses before we start trading. And no, we are not harming anybody. Everyone's action, everyone's market execution is based on their own emotion, is based on their own reasoning. If they are not learning, if they are always looking to enter a trade, you are not at fault for their losses. You are not harming them, they are harming themselves. You're only playing the game according to how you understand it. And if you understand it, you're going to be earning money. And if you do not understand the game, you're only going to be losing money. That is how the game works, right? And it is the same rules everywhere, where the strong preys on the weak. If you're patient, right? If you're patient, if you're disciplined, if you're experienced, if you're knowledgeable, you're only going to be winning and not losing. That is how the game is played out, not just in trading, in every aspect of the career, in every aspect of life. If you're always one step or two steps ahead of others, you're only going to be winning. You're never going to be losing. Because as I said, if you're always one step ahead of others, you're only going to be winning and not losing, right? And those who are winning and becoming at the top of the game, they're not just one step, they're not just two, they're not just 3 steps ahead, they're 10 steps, they're 20 steps, they're 50 steps ahead of others. That is why they are at the top of their game. That is why sometimes instead of playing the game, they are owning the game, they're manipulating the game. That is how they are always winning. Which means if you're looking to be winning on everything you're gonna do, be steps ahead of others. Be it 1 step, be it 2 steps, be it 5, be it 10 steps, or even 100 steps ahead of others. Just know that you have to be ahead of everyone to be at the top of your game. Not just in trading, in every aspect of career, in every professionalism, you need to be steps ahead of others to be able to win the game, right? So right now, we'll be looking at a chart and we see that the 4-hour time frame has created another reversal right here, right? This bullish reversal, and wasn't able to complete it, right? Why? The price push up, yes, and the next candle push down, retrace, and when it retraces, we start buying, right? But we are not buying if this reversal isn't complete yet, because buying over here means more risk, because reversal isn't complete and you're buying means you're risking more than you should, because you're wishing for the price to pull back and then push up to break resistance. But since this reversal isn't a complete one yet, isn't a legit reversal yet, means price still has a chance of moving down. And you see right now the price is really moving down, and it is not moving down in a straight down direction, it is moving down in a sideways direction if you are looking at the lower time frame. And as I've said before in my previous video, that price moving down in a sideways, moving up in a sideways, is also a means of the market accumulating buy and sell volumes. If the price is moving down slowly, right, in a sideways down direction, the market is accumulating buy volume before it starts to dump on the chart, right? So right now the market is slowly moving down, accumulating buy volumes, triggering buy limits from support, and slowly triggering buy limits one by one. So right now, if the market has accumulated enough buy limit or buy volumes or buy position, it is gonna dump. Not now, but soon it is gonna dump on the chart, and then it will create a reversal, right? A bullish reversal, depending on whether the people are gonna stop buying. If the people are gonna stop buying, this bullish reversal will be a strong one. But right now, since the price is sideways down, we are not believing that the market is gonna go up, right? The market is not gonna expand upwards anytime soon, because it is pushing down, accumulating buy volumes, and accumulating buy volumes means the market has to dump to clear off buy volumes before the market can start reversing once again, right? The market has tried to reverse and expand upwards, but it wasn't able to do so because people are panic buying, people are fear of missing out and panic buying. And since people are panic buying, the market has to clear off all those buy volumes from panic buying first before the market can go up once again. Which means this price action shows us that market still has a chance of moving downwards further. So right now we are not going to enter a buy position, we are not going to enter a long position. We are going to wait until the market has revealed something. We either wait for the market to push down and then we buy, right? We buy at this week over here before the next support, and wait for the price to reverse, or we wait for this candle over here to pull back and push up, and then if this candle is able to push up and then break this resistance, the next candle retracement will start buying. That is how we're going to look at price action, because if price action is not complete yet, buying means risking more than you should, right? Which means this reversal is a good one, it's a successful reversal, because reversal is created, but reversal is not complete. If reversal is not complete, it still has a chance of pushing down, right? A complete reversal means that price can push up further, which means if reversal is never complete, we never enter a trade. That is the best way to manage our risk, right? So for today, knows that we are not buying until the price is dropping down, or wait for the price to break resistance. That is how we're gonna do it. So for today, see ya.